Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's get a check on some of the stocks on the move. For that, let's toss things over to Bloomberg News cross-asset reporter Denitsa Sokova. She's back at Bloomberg headquarters in New York City. You are watching some stocks on the move. Nike, man, it's been off and running. See what I did there?
Let's start with Nike. The ticker is NKE. The stock rose as much as 18% today. That was actually the biggest intraday jump in about 26 years. Now it's up about 14-15%. Nike said its year-long sales decline is starting to ease and forecasted a more than expected drop in revenue. And obviously this sent the stock on a massive jump today. We have had the new CEO, Elliott, having so many strategic moves, refocusing on sports, clean up inventories. They've been trying to lure more women into the brand. We've had Nike schemes, which actually there was a delay, which wasn't great news for investors, but also that Nike's returning to Amazon. They're expecting to have their own featured store. So there are all those developments, which a lot of them have been derailed with tariffs. The stock is actually down 5% year to date. But today we're seeing really big relief and optimism, and really one of the best days in quite some time for Nike, up about 14%.
Yeah, I think a big question that a lot of people have is, okay, what does this revamp look like under Elliott Hill? How long is it going to take? As we talked with Poonam Goyal yesterday, why aren't they selling down this inventory as quickly as we thought they would?
Yeah, that's, I think, a big situation. But I think what she also said earlier this morning is that, they got more clarity about that and kind of what the company's doing. And I think there was more specifics and more detail that made investors certainly feel much more upbeat. All right.
Wait, I just want to repeat, 15% to the upside on a day like today.
But the stock's still down, I think, about 4% this year. So it's just a reminder of how much they've had to come back. Hey, I feel like this whole week we've been talking about driverless cars. There's so much going on. Denitsa, Uber and Lyft are on your radar, and those are, super easy tickers as well.
Super easy ticker. Uber is UBER, and Lyft, of course, is LYFT. The stocks are down. Uber is down about 3%. Lyft is down about 2%. And it's interesting. It's coming off a note by Canaccord, which is seeing potential for rapid disruption, saying that robotaxi complex could disrupt the ride hail. This is kind of interesting thesis because we have seen Uber partner with Waymo. We have seen those companies working together so far. So this is one of the first big costs we're seeing for disruption, and that's also moving the price. The challenge for Uber and Lyft, the analyst says, is how long a hybrid network will stay relevant and what value can they add in that paradigm shift. Of course, we had the news about Uber yesterday, looking for their original founder to actually acquire and look into their own company for automatic driving. We're yet to see if that will happen, but the competition is heating up there. And today we're seeing pressure down for two companies that are actually having a great year. Uber is up about 50% year to date. Lyft is up about 20% year to date. But this is raising questions about the new paradigm. And, investors are very sensitive and they always want to stay ahead the new trends.
Yeah, I mean, and Uber sold off its advanced technologies group, 5 years ago at this point, Carol? 5 years ago, which Travis Kalanick kind of saw the writing on the wall. When he started Uber, he started working on this technology. It was a lot of money. It cost a lot of money. Investors didn't love it. Dara Khosrowshahi sold it off, so kind of what's old is new again. That's what's happening right now.
It's really kind of fascinating to see this whole cycle. One more real quickly.
Estee Lauder, the ticket is EL. That's one company that needs relief really badly. It has 3 consecutive years of losses. It's up 7% year to date and 2% today. It's coming off HSBC upgrade, saying that the company this is the end of the downgrade cycle. We saw a similar note by Deutsche Bank that the company is diversifying beyond China. So some optimism for a stock that has been under a lot of pressure for quite some time.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.